question, due to which the call at a position between the range of 23,100 and 500 for the coming week of expiry got liquidated heavily. And overall, as per the resistance zone, if we look at it, the monthly base also of the call writer position, it is near 23,500 level. So the next immediate resistance for the Nifty will be directly at 23,500 level. As we are seeing, a gift Nifty is likely to open 50 points or upper, and we will witness some buying momentum in the first half of trading session towards the 23,300 to 350 level in today's first day of a trading session, first half of trading session. While India VIX yesterday came down by 0.46%, but still India VIX is trading at 16.70 level. Once if India VIX goes below 15 level, then only some sort of stability will be witnessed, and overall fluctuation which we are witnessing right now in the market, volatility which we are witnessing, will get a stable only below 13 level. So once if India VIX is having the range of 15 to 13 on the lower end. Once if enters into that range, then only we might witness some fresh buying opportunity, or else from the upside level again we might witness some sort of pressure in the market. But at this point of time, we should hold the long position and can create new long position with the support of 23,000 levels. While on the stock specific front, persistence engine Adani Energy looks positive. On the negative front, Axis Bank, Geo Finance, and India Mart looks negative. So that's it from the front. Thank you.
Good morning. Yesterday, Polycab India hosted the con call. To recall on the result front, we had seen that wires and cable business had seen the weak momentum, mainly due to the wires business, and FMEG segment grew by 45% on a YY basis. Overall operating margins improved during the quarter, mainly led by a reversal in wire margins from the lows of last quarter, and export revenue share was up at around 8%. Also, increasing contribution margin for FMEG business reduced its losses, and it has started receiving the benefits of scale. There was a slight moderation in APC business margins. The management in the con call has highlighted that it has achieved its FY26 guidance of rupees 200 billion of revenue in calendar 24 only, and announced its guidance till FY30 based on the government's vision of Vikasit Bharat by 2047. In wires and cables, it has guided for 1.5x of industry growth, having more than 10% of contribution from the exports revenue, and operating margin in the range of 11 to 13%. In FMEG segment, it has guided to achieve 1.5 to 2 times of industry growth, with 8 to 10% of EBITDA margin range. To drive this growth, it has announced the capex worth rupees 60 to 80 billion, with an expected asset turnover of 4 to 5 times. And it expects positive cash flow generation over the medium term, from which it has decided to increase its dividend payout ratio gradually up to 30% from the current level of 26.4%. Remaining cash flow aimed to be utilized for the inorganic growth. The stock is currently trading at a PE of 39 times to FY26 CPS. We are positive on the company, where one can accumulate the stock on dips. Amber Enterprises India Limited announced the result ahead of expectations. Revenue grew by 65% on a YY basis, well ahead of expectations, and also on a YY and QOQ basis. EBITDA delivered 100% growth, where EBITDA margin reported at 7.4% versus the expectation of 6.8%. Overall performance was led by consumer durable and electronics product divisions, with robust growth in top line as well as improved margins. However, the division of railway subsystems and defense has seen 13% degrowth in top line due to delay in metro and Vande Bharat projects, and Indian Railways change in focus on non-AC coaches. Margins also declined from around 20% in Q3 of last year to around 11%. This is mainly due to product expansion expense, which is expected to normalize. The stock is trading at a PE of 60 times to FY26 CPS, and we will provide the outlook post today's con call. Thank you.
Good morning. A couple of results. Cyient Limited results were broadly in line with the expectations, wherein its DET revenues grew 2.4% on a quarter-on-quarter basis, constant currency terms. EBIT margins came in at 13.5% versus expectation of 14.1% quarter-on-quarter. Order book almost doubled quarter on quarter and grew 6% Y on Y at $312 million. Two things during the con call which the management has highlighted is firstly, Natarajan sir has stepped down from the CEO's position. Secondly, company has guided for a degrowth in revenues for FY25 by 2.5%, which would translate into a flat or marginal decline in Q4 revenues. Management cited delay in ramp-ups to be the prime reason, and Q would see good growth. Also, margin guidance for Q4 as well as for FY25 is a little muted at 13.5%. So these developments might keep the stock under pressure in near term. Secondly, emphasis numbers are in line with the expectations, with revenues and margins broadly meeting the street expectations. Positively, order book seems strong, which has shown a growth of around 70% quarter on quarter and 46% Y on Y. Stock is available at 28.5 times 1 year forward earnings, and long term outlook for emphasis remains positive. Shall give further updates post con call scheduled today. Thank you.
Good morning. Ujjivan Small Finance Bank reported its result. Result is below expectations. Its disbursement came at rupees 5,360 crores versus quarter on quarter 5,374 crores. Advances grew by 10% year on year and 0.4% quarter on quarter. The net interest margin declined to 8.6% versus quarter on quarter 9.2%. Profits came at rupees 109 crore versus expectation of rupees 156 crores. Uh, Gross NPA has marginally grew to 2.68% versus quarter on quarter 2.52%, and net NPA was flat at 0.56%. Stock is trading at PE of 5.3 times FY26 EPS and trading price to book value ratio of 1.2 times. The overall outlook is neutral. Also, Spandana Spurti Financial Limited reported its result. The result is declining. PAT declined to rupees minus 393 crores, that is minus 433% year on year. And AUM declined to minus 14% year on year and 15.2% quarter on quarter. Disbursement declined to disbursement declined to minus 43% year on year, and net NPA came at 4.85% versus quarter on quarter 4.86%. And the stock is trading at a PE of 6.8 times FY26 EPS and 0.8 times trading price to book value ratio. The outlook is negative for the stock. Thank you.
Good morning. Sona BLW Precision Forging Limited result is below expectation. Revenue from operation declined by 6% quarter on quarter but increased by 11% year on year. EBITDA declined by 7% quarter on quarter. EBITDA margin came at 27% versus expectations of 27.8%. PAT is below expectations. Company gave some guidance. The company expect to recover the revenue lost due to customer model transition by the first half of FY26. With EV orders comprising 76% of the order book and strong traction in BEV revenue, the company expect robust growth in the electrification space, particularly in India and Asia. Company is also exploring growth opportunities in China, Japan, Korea, focusing on EV first strategies while continuing to strengthen its position in North America and Europe. The order book remains stable at 23,200 crore with strong conversion expected from existing and new EV programs starting by FY26. Stock is trading at P of 36 times FY26 EPS. So overall outlook on Sona BLW is neutral. Thank you.
Hello everyone. UltraTech Cement Limited had posted its results yesterday. The results were marginally above expectations. Revenue from operation of the company came at rupees 17,193.3 crore, which were 10% above the last quarter and 2.7% on a yearly basis. The EBITDA came at 2,887 crore, which were 43% more than on quarterly basis. However, on yearly basis, it fell by 11.3%. The EBITDA by ton came at rupees 951, which, however, on a yearly, which were more than the last year, uh, uh, which were more than the last quarter of 725 rupees, and however last year it was 1190. The volume figure were 30.4 million ton, which were more, which as compared to last quarter 27 million ton, 27.84 million ton, and on yearly basis 27.32 million ton. The company had done its con call yesterday, and outlook was positive. The company in this call highlighted that exit price in December was up by 1% from average price in Q3. Also, further price increase of 1.5% is expected in January. Uh, the company has invested in India Cement, and they expect India Cement to be profitable by FY26 year end. The company's realization per ton stood at 4,970, reflecting a 1.4% increase compared to the previous quarter. However, on YoY basis, the realization declined by 9.6%, primarily due to pricing pressure in the market. And the company has done various efficiency improvement programs, because of which the clinker capacity has increased by 6.7 million ton during this quarter, with the addition of 3.35 million ton expected to commence operation within the current quarter. The company's current clinker conversion ratio is of 1.45 for the quarter, slightly up from 1.44 in Q4 of previous year. The lead distance has also been reduced to 377 kilometers, down from 400 kilometers. The waste energy recovery system capacity has increased to 324 megawatt, up from 278 megawatt at the year end Q4 2025. The stock is currently trading at a EV by EBITDA of 19.5x of FY26 expected EBITDA. Thank you.
Yeah, apart from this, few more company which has reported results. Yesterday, Elecon Engineering had a con call, and company has given positive indication wherein Q4 seems to be very encouraging, though Q3 was subdued and share corrected on that account. But Q4 is the indication is that revenue can grow at almost at around 35 to 40%. Management has reiterated that the yearly guidance which the company has given, they will miss just by 3%. So that looks quite positive. Again, looking at the order book, quite possible that the next year company can grow at around 18 to 20%. Current year, company has said that they are seeing some softness in steel and sugar sectors where they supply the gear, but order has not been cancelled, so it seems more of a delay in execution of the order. So quite possible the next year revenue could be can still see growth of 18 to 20%, and if that happens, then the stock is having a potential, and we recommend to hold the stock, and any dip can be used to accumulate this stock. Then apart from this, Tejas Network has come up with the results. The results were declining. revenue and profitability has also declined. Revenue declined by 6% quarter on quarter, and EBITDA declined by almost around 30% quarter on quarter. EBITDA margin came in at 14% versus last quarter 19%. They are executing a large order of BSNL, and it's coming to near to its completions. As such, the order booking has declined from 4,800 crores to 2,680 crores. And last year, when they got the order book reached to 9,000 crores. So from 9,000, almost they had come down to 2,700 crores. And a company is awaiting fresh orders, but not yet got any order from the uh, market. So as such, stock will be under pressure and may see corrections in today's trade. Then United Spirit came up with the numbers. Numbers were more of in line with expectations. The volume growth came in at around 10.2%. Quarter on quarter, last quarter it was negative 0.7 and last year 7.5%. Rest revenue and EBITDA were more of in line with expectations. The valuations are a bit stretched at around 61 times FY26 earnings. So outlook is neutral. Then V2 Retail has reported very strong number. Company has already reported revenue at the start of the month for quarterly updates, and the revenue grew by around 58% year on year. But the EBITDA margin performance has also come very strong at around 19% versus last year 16.3%. So there also we are seeing improvement. So the valuations are at somewhere at around 41 times FY26 earnings. So market is capturing already growth parameter. So at current price looks fairly priced, but any good corrections can can be used to accumulate the stock. Dr. Reddy reported below expectations number. So that's all from us, and I'll request commodity team to take up from here.
Yes, sir. Thank you very much. Good morning, everyone. So in today's session, we are expecting gold and silver prices to trade positive. Buying on dips is recommended. Gold one can initiate a buy around 79,800 to 750 with a stop loss of 79,500. And on upside, we are eyeing for 80,300, 80,500. So buying on dips is the view, and silver also one can initiate a buy around 91,500 with a stop loss of 90,700. On upside again, it is expected to test 92 800 to 93,000. And in metals, copper, we are expecting prices to test 835, whereby one can initiate a buy with a stop loss of 830. On upside, it is expected to test 842, 845. So as long as prices are holding 835, we remain positive. And in zinc also one can buy with the stop loss of 269.50. With on upside it is expected to pull back till 275 to 76. And in crude oil, prices have opened gap down. It might test 6400 on downside, then we expect a pullback from 6400. So for trading purpose, one can sell around 6500 with a stop loss of 6550. And again on downside, 6400 is the area where one can buy for a pullback, maintaining a stop loss of 6320. In natural gas, we are expecting a consolidation from 350 to 329, 328 levels. So trading within this range is recommended in natural gas. That's it from us. Thank you very much.